By taking it to our first floor show of 2026. Joining us now, T3 Trading Group founder and Chief Strategic Officer Scott Redler, whose 250,000 subscribers and followers collectively manage more than $1 billion in the market. Scott, you've been stewing over your charts. What do you foresee when it comes to the lifespan, at least for this coming year, of the bull market?
Well, after 3 years in double-digit gains, a lot of people are trying to figure out what's next. And we know historically, usually the S&P is up 9% a year over the past 25 years or more. So it's going to be hard to get double digits for the S&P and the broader indices. So I don't think that's that important. Most people who put their monthly flows are doing it long-term. They need to continue doing that. If you remember last year in the first quarter, we were down like 20%. Everyone thought the bull market was over. Meanwhile, I think we closed up, 16%? That's a huge range. So for those long-term, just keep putting in monthly inflows. Those who trade for a living like I do and like how you track the markets, we're going to see volatility in the first 5 days. You're going to see some shaking and baking like we saw with the Mag 7, how they started strong and then they sold them down with some profit takers. And then you saw some of the old themes, like you said, the semis perked up. You saw some of the data center stocks perk up. You saw a lot of the energy type names finally perk up. So trades are trying to figure out what's going to be the established trend in the first 5 days to month so we can make money, because that's how we get paid. We get paid making money, netting money, and we also get paid investing for the long term.
Okay, so right now, one of those trades, at least for this day one, appears to be that the semis are working. We talked about that. Let's talk about the silver and gold trade. I mean, gold obviously had an incredible year, but silver was off the charts with that massive gain. You're the contrarian on this metals trade.
I would just say when a parabolic move takes place like we saw, and you saw the violence, to me, that's toppy. That shows me that it was exhaustion. I've been in the silver trade. I was in the gold trade. It was a great trend. It was a trend that's been trending for multiple years that finally I think kind of found its apex. So I don't think silver is going to hit $100 this year. I don't know if it's going to fall apart, but it's not going to be as much of a focus as it was the past 3 months. I think it needs to be kind of on the side, let it rebuild, let it prove where it could hold with gold. I think there'll be a lot better performers over the next 1 to 3 months than gold and silver.
Well, you talk about the January effect overall. Sort of as January goes, so often goes the rest of the year for the stock market. So if we have a positive year in January, something like close to 70% of the rest of the year, it looks like it'll be pretty decent. We'll see some positive gains there. What are your favorite January effect longs?
Well, the January effect has two different meanings. The first 5 days of the year sometimes give you clues on what's going to happen next. And if you see some power in the first few days, you know that there's more inflows than outflows. So it's a good sign. The January effect, though, is when the bean down names that were thrown out the window in December because everyone just needed to take some losses versus their gains get a really nice move. So some of the ones that I'm looking at that I'm involved in, I like Nike. I like the fact that the CEO bought shares. I like the fact that Tim Cook bought shares. I think that Nike could have a really good first quarter. I think it could hit like 75. It's trading somewhere in the 65 area. I also like Chipotle. I think Chipotle got battered and bruised because of inflation and costs, and everyone put a spin on it. But I think Chipotle could go up at least 40% from where it is here. That's CMG. I like both of those January effect type names. They were just thrown out the window because people needed losses, but I do think that pressure will be off and they'll have a much better January.
I think people need to be aware that, yeah, sure, the first 5 days of January are important, but beware of certain things. You specifically point out that a lot of people may do some selling of winners. So what should investors do? Do they panic when they start? I mean, you never want to panic, everybody, but do you start selling if you start to see those winners from last year go down?
It depends where from. Like if you look at Palantir, it's been down 4 days in a row headed into today, and that's been a historic winner over the past multiple years. So now finally, some can come in and take profits and pay taxes in 2027. So they might have wanted to sell it in December. They didn't because they didn't want to pay taxes in April. So you see some winners get a little bit more pressure in the first week or two of January, but it doesn't mean the narrative is over. It doesn't mean the story is over. It just hurts if you're an active trader and you didn't see it coming. I know for today, this morning, I was involved in Amazon and Apple. I kind of thought that they would continue, they would get new flows, and they popped in the first 5 minutes, and then they've been sold all morning. Doesn't mean the Apple story's over. It doesn't mean the Amazon story is over. I think every major wirehouse put Amazon as one of their #1 picks, and the stock didn't do that much last year. So I think Amazon could still be a great play for 2027. I'm going to wait for the tactical turn. I still think Apple's going to come out with a foldable phone, and I think that's going to ignite another super cycle.
Well,
instead of having like iPhone.
let me just bring up Apple for a second here. I mean, you had Raymond James today resuming coverage on Apple with a market perform. They had previously had it at an outperform, so Apple right now down 0.5%. But you say that this super cycle may be jolted to the upside here if they come out with a foldable?
That's what people are waiting for. They don't want iPhone 2020, 2045. They want a new phone. The Samsung foldable phone, I think a lot of people have now, and it's kind of reliable. But people in the Apple infrastructure don't want to move. If they're in the Apple economy, they're waiting for it. I know me, I've been sitting on my iPhone for a little bit longer waiting for that foldable phone, because most of us do our emails on our phone, we're watching our shows on our phone, we're doing everything on our phone, and when the phone isn't reliable or broken, you are lost. So I think that foldable phone that comes out will create a whole new super cycle. It'll bring in new buyers, then you're gonna have new accessories. So I think, I'm not sure when the new active sequence is going to start for Apple, but I would say that I do think this stock's going to see 300 plus. It's just a matter of it's going to be in the second or third quarter of this year.
Yeah, it's at 270 and change right now. I do want to point out that the Dow Jones Industrials is having a very good final hour of trade. It's up 318 points, folks. High of the session, 337, but we've had a pretty dramatic swing of more than 547 from trough to peak. It had been down 210. So green on the screen at the moment for the S&P, NASDAQ, Russell as well. Scott, good to see you. Thank you so much.
Have a great January. Thanks for having me.
Thanks so much. You too.